Boys, here today with us is Ed. How you doing, Ed?
I'm doing great. Thanks for having me on.
We are going to be discussing cryptos today. Basically, an introduction to Crypto 101 for our retail investors that haven't really gotten involved with cryptos yet and maybe don't understand a whole lot of what crypto is because it's extremely complex to understand. So my first question to you, Ed, is what is crypto?
Well, we got to unpack that a little bit because crypto is a couple of things. There's an underlying technology. Bitcoin, as far as we know, is Satoshi Nakamura, an alias created with some people, a technology called blockchain. And what this is nothing but a ledger. Like, let's say you had 17 accountants around and they all had a paper ledger, and every time there was a transaction made, they all recorded it in their ledger and they compared them and made sure that everybody had the exact same entry. And then if somebody had an entry that 9 of the other guys didn't have, it would be invalidated and taken out of all the ledgers. So all the ledgers have to sync up. At least 51% of the ledgers have to sync up and agree that a transaction happened. And that could be money transaction, that could be me selling you my car or giving you my car, and then you have the ownership. Now, so that's the ledger, the blockchain. They create a coin, a token. It could be a digital dollar. It's a representation,
Right.
And this has the value. So when you do a transaction, you're actually moving that token or that coin or that Bitcoin, as they call it, from one wallet or one person to another person. Just like if I were to go on to my bank account and send you $5, that's recorded in the bank ledger. That $5, or in this case, the Bitcoin, would travel to your bank account and it'd be recorded on both ledgers. And then ultimately through the financial system. Well, blockchain does this automatically. You send your money, which is the coin, the ledger makes sure that the transaction is legal, everybody agrees, and then it's immutable. Because if you can't erase it from one ledger without all the other ledgers saying no, put it back. Bitcoin being the money, the fuel that makes these transactions. So crypto is, for lack of a better term, a coin, like a dollar. It could be like a security stock, something you trade. Underlying that is the ledger, the technology that is really transformative. Most people don't understand the blockchain. They see cryptos are trading like stocks and other things. Bitcoin's going up and things like that. And that's most people's introduction. I know that's a little convoluted.
Yeah, so with the blockchain, what exactly is a blockchain? How are they created, and what's the purpose of them?
Yeah, the blockchain is a software that, as I say, it's like a paper ledger, although it's an electronic ledger on your computer or anybody's computer. And then these are duplicated, in the case of Bitcoin, on hundreds of millions of other ledgers that keep a copy of this record of transactions. Now, so let's say you've got 50 people and they're all sending money back and forth to each other, and you got this group of transactions. Well, those get put into a block, and that's where they call it blockchain. And that block contains X number of transactions. And then all the different ledgers around talk about these blocks, and I'm being very rudimentary here, not getting into the technicals of math of it, but they basically decide that, oh, this guy's block is valid, and then they all add it to their copies of the ledger. And then they move on to the next set of transactions. And they're all competing, the computers, to say, my block's right. And then once they all get to a point where they agree, that block gets added to the ledger, and then those transactions are confirmed, meaning they're in the blockchain. They'll go 30, 40 blocks down, and they can never be changed.
Interesting. So go ahead.
I was going to say, so it's really just sets of transactions that are added to ledgers, and then those ledgers around the world agree that these are valid.
Okay, so with mining, and I'll get into mining a little bit more. So are they trying to close these blocks?
Yeah, that's exactly what it is. Mining is the actual math and everything going around that validates these blocks with the other miners or nodes or other computers that are checking the block ledgers, the blockchain. So when you're mining, you're trying to say my blocks are correct, or these groups of computers are saying I got a block of transactions and mine are the ones to go. And then once they all agree, that now the computer or the group of computers that gets that next block that's valid gets rewarded for all that work of creating a valid block that everybody agrees to add to the ledger. And in Bitcoin, in a form of, what is it, 5 now? I think it's half down to 5 Bitcoin, or
Yeah,
I'd have to look at it. I don't mine Bitcoin, so I don't know the exact. They had a halving. It started out on 10 Bitcoin. It's halved a couple of times or something since the beginning. So when your computer finds a valid block of transactions and all the other computers add it to the ledger and say that's right, you get rewarded. And that happens about every 10 minutes.
Okay. So and I was going to get into this a little bit later, but you kind of brought it up and I wanted to kind of touch on it. What is halving?
Okay. Yeah. The halving. Now there's only Bitcoin are created by mining. Every time there's a block added, another set of Bitcoin are added to the amount of Bitcoin that are available. Now there's only going to be 21 million Bitcoin created. Mm-hmm. At the end of the mining, now every halfway through the process, they were doing 10 Bitcoin every 10 minutes. When they got to about half the Bitcoin are created, they cut that rewards down from 10 Bitcoin to 5 Bitcoin. So the same amount of work now is only giving you half the amount of Bitcoin. Now that'll half again as it gets closer and closer. You know, it's when it gets 25%, you know, half again, it'll cut down. When it's half again to the 21 million, it'll go down to 2.5, 1.25, you know, and down like that. So your mining rewards in the amount of Bitcoin go down. And eventually they're going to get to the point where there's no new Bitcoin are created. Okay. At that point, there's another cost involved. When you send Bitcoin from one person to another, looks like I may have locked up here. There's a transaction fee. Now the miners also get, in addition to getting paid for creating, you know, the block in the new Bitcoin, they also get a portion of the transaction fees. Interesting. So in the future, when there's no new Bitcoin to be created, the miners will be incentivized to keep creating blocks by getting the transaction fees that we pay to use the blockchain. Yeah, now, you know, the mining aspect of and the halving and all this it gets really complicated. Your normal investor needs to only have a cursory understanding of this, because you understand that eventually that Bitcoin, you don't have to understand why it's halving or, you know, the mechanism behind it, but know that when Bitcoin halves and the rewards become half, that causes the price to go up. Correct. Because the demand goes up. The beauty about Bitcoin is a supply and demand marketplace. Mm-hmm. There's not much legislation out there screwing with it.
Right. So, and yeah, so with Bitcoin, I mean, it's the most recognizable, obviously, coin. It was the first. It was created back in 2009, and it was created from what I've gathered. It was created as kind of a medium to currency, to kind of use as like a different way of currency. What are your thoughts?
Yeah, certainly. Well, I'm gonna really upset the Bitcoin maximalists here. Bitcoin is a prototype. It was created as a prototype. It was the first run to see how this stuff would work. Hey, it worked great. It got so much interest. I mean, they've developed it more. They've improved on it. You know, and you know, it holds the power it holds because it's the default. Everything trades against Bitcoin. Every dollar, every ruble, every yen, every other coin out there trades against Bitcoin. It's like the petrodollar. You know, the reason US dollar is so strong is you can't buy oil without it. Well, you know what? Everybody buys Bitcoin first. You can buy other cryptos without it, but you're going to, pretty much everybody's going to get Bitcoin, and it's become the default. Now, is it the best solution out there? No. I mean, obviously, if it was, they wouldn't have been improving it all the time. But there's aspects of Bitcoin that are just it's unowned.
Yeah,
nobody can sign it.
Right. And it seems like now it's, it was, created for that kind of medium, but now it's almost being used as a hedge against inflation. And you've kind of been able to see that over the last year as these talks of inflation and then the price of Bitcoin goes back up. Because this year it's been pretty it's a pretty volatile crypto anyways. I mean, it's ridiculously volatile. I mean, it dropped back down to, what was it, sub 30s, wasn't it, this year? Like
something like that, yeah. Or no, it wasn't sub 30s. It wasn't sub. It was into. I know it was into 40s. It might even hit like 38, 39. I have to go back and look at my charts. And then and then
50% from its all-time high, which was 64 or whatever, and then it dumped back down, and then so it just seems like it's being used as kind of like this hedge against inflation, and more institutions are getting involved.
Bruce Fenton, obviously a known name out there in the Bitcoin community, once said to me, or in a post, Bitcoin is controlled by 8 whales, 5 of which live behind communist countries, countries, obviously. So that's changing. Obviously, you're right. Big money's getting into it. All the fun. What did Jamie Dimon said? I'll never buy crypto, and now they've got billions of dollars in it. So it is, definitely it's being used that way. I personally, I use it somewhat that way. And that's basically because I don't have an ability now to purchase enough gold or silver to use that as my hedge also. I love it as a hedge. My only problem with it as a hedge is when the power's out, it's useless.
Right.
Yeah.
Good point.
That's if they decide to turn the grid off for whatever reason, then it's not a hedge anymore. And then of course the only hedge at that is physical metals.
Correct. Your commodities. Gold, silver.
But I tell you, absolutely. With the way inflation's going and my dollar dropping every single day, I'm looking to my crypto to help replace some of my buying power.
Well, absolutely. And there's been a lot of talks that it's the new gold standard of money, currency is what it's become. I mean, is crypto at any point ever going to take over traditional currency? I mean, as it gets accepted more and more?
Maybe. I hope it doesn't completely, because I like the fact of paper money. I like the anonymity of it. Mm-hmm. Not that you can't do that with like Monero and Monero and things like that. But yeah, I think it should take over our digital fiat currency that we have now, the digital dollar. I mean, they don't call it the digital central because it's not a lot, but I think it should. Absolutely. I'd much rather be trading cryptos through my bank account, to pay my bills than US dollars, because I have more control. The thing about, and I'll say this, BitBoy Crypto, a guy I listen to sometimes, it made a great quote: governance without governors, rules without rulers.
Right.
Blockchain allows us to do 90% of what we use with government without people involved.
Mm-hmm.
And then you don't have bias, you don't have cheating, you don't have grifting.
Right. You don't have that control. And these open source, cryptos are decentralized, and I mean that's what people really want. I mean that's why it's so.
Well, and then Bitcoin, and what really scares is this: Bitcoin has the ability to take financial market control out of the government's hands. Correct. There is really no reason for the government to be controlling anything to do with financial money supply or anything. We've just traditionally done it that way. And
Right.
not always. You can go back in there's been many countries in the past that didn't control the currency that they used, whether it was gold or
Right.
silver or, shells. So, but that
Sure.
scares them. That's the big thing I see about crypto is the financial aspects of freedom.
And yeah, and I agree with crypto, like, like stocks, you diversify with stocks. Should you diversify with crypto, using crypto?
Oh, I think so. Absolutely. Now, you guys are more into the trading and the stocks and day trading or momentum trading and things like that than I am. I first got into stocks back about 15 years ago when I was working for a company doing some side work, and they were paying me in over-the-counter stocks. And I got a real good education. I also started following Patrick Byrne. That was about the time that we got a lot of the naked short selling stuff, the problem settlement in the settlement structures, and all that was going on. And I got a really great education into all that. And I found out that I can't day trade personally. I screw it up. I lose money. But what I found I do is I do a lot of due diligence. I read deeply into things, all the background, all the 10Ks and Qs, and done well in some long-term investments. I take that same approach to cryptos for the most part. Having said that, I just bought, I think you mentioned it too, I bought some SHIB about 3-4 weeks ago on the hype. And I made
Yeah.
money on it. I mean, not
Right.
a lot, less than $100, but hey, it's fun. I've gotten out, I've gotten back in, you can play the hype, you can play the news. If you're that kind of person that can trade, you can make a lot of money in cryptos,
Yeah.
because you see the volatility, and it's fairly predictable in my opinion. Obviously, it can jump at any time, and you never know when it's going to pop. But when ETH hits an all-time high and is throwing strong, there's going to be a $200 or $300 pullback there over the next day or two. Same thing with Bitcoin. It's going on right now. If I pull it up, it hit I believe, did it hit the all-time high?
I passed
66. It did pass it. Yeah.
Yeah.
It did pass it just barely. Oh gosh, I must be looking at a long chart here. But yep, there it goes. But then it's drifted back, a couple of grand. So you can, if you're patient and those, unfortunately I'm not. So I don't day trade like that. But you guys can absolutely, I know you guys do a lot of momentum trading news, things like that, sell the rumor, buy the, or buy the rumor, sell the news, and do very well in that.
And what we are with, like, the ball boys, we are all about due diligence. We are all about deep diving into companies and bringing out the true fundamentals of the company and letting the retail investor make a decision on whether or not they want to invest in that company or not. What we do is we just kind of bring it and centralize all that information. We don't work on technical analysis or anything like that. It's all about the true deep dive due diligence for the retail investor. And that's why I wanted to bring you on and talk about kind of this, deep dive into this. So in order for cryptos, they have white papers, right?
Mm-hmm. So many of them, they may not. Well, first off, let's just say this: anybody getting into crypto or interested in getting crypto, if you don't buy Bitcoin first, or if you get any advice that says buy anything other than Bitcoin as your first coin, it's bad advice. I mean, and it's the standard.
So you should always have Bitcoin.
I agree. I think so. Now, and everybody that I deal with and in the communities, I have that same sentiment. So, it's not just my opinion. I'm bringing that opinion from it. And I don't like giving financial advice, but that's something I feel confident in giving. Now, having said that, I own several others. I own XTZ, which is Tezos, because I wanted to do some staking on that. I get 5 to 6% annually off of at Coinbase or wherever you stake. Could be at Binance with that. I own, as I said, mentioned Ravencoin. I don't like ETH, and I'm sorry, it's a great money maker. If you're a trader, you've got to be in the ETH. You got to be watching it.
which is
I
Ethereum.
trade. Yeah, Ethereum. Sorry. And it's going nuts right now. If you bought Ethereum 3 weeks ago, you're such a happy person today.
So, but with
and
it,
same thing
with Ethereum is like, how is that set up differently than Bitcoin?
Well, Ethereum is using a blockchain. There is no cap on it, meaning it's not going to stop. There's no halving or things like that, although they play with the rewards around it. It's moving to a different, there's several different types of mining: proof of stake, proof of work, things like that. I don't want to get into the weeds of that, but Ethereum is more of a platform for building businesses on. So let's say I wanted to offer shares. I want to use a good analogy. I wanted to have a lemonade stand, and I wanted to sell 50% of it to my neighbors, and they would get payouts. So I could go onto Ethereum, and I could create a token saying Ed's Lemonade Stand, and with 1,000 shares, and then I could advertise that and sell private sales, because we don't want to get into securities and things. So I would only do it at what's called a PMA, private membership organization. We don't want to get the SEC, but as an example, to my neighbors. And I raise my $200. I buy my stand, I buy all my things. I go out there and I sell lemonade. And then every day I take my money and I turn it, let's say I accept payment in ETH. Those payments could be automatically paid out as I'm accepting payments to any of the holders of those tokens.
Okay.
There could be smart contracts. Smart contracts are, I put something out there for sale, it goes into a bidding process when automatically, no people involved, when a certain number is hit, the contract's triggered, payments made, certain things are sent to the buyer. You can do a lot with ETH. ETH is made more for building a business, and that's why. I don't even know how many tokens are made on top of the the Ethereum blockchain now. Like SHIB, we talked about, is on top of. I believe that's one. Is that one on? No, we mentioned that's its own blockchain. Mm-hmm. There's so many tokens that are built on top of Ethereum, still using that blockchain. I'm sure you can name a bunch of them for me.
Yeah. So getting into like your NFTs and your assets and everything, like why does like an NFT hold a monetary value? Like what makes it a monetary value?
Why does a Picasso hold a monetary value? Because people want that painting. So an NFT only holds value because people want it. Now, a little bit of background. I studied art and architecture in college. I really love art. I have a great affinity for it. There's a lot of arguments it could be made that it's useless, that it's the only thing, but I understand the value of it. I don't collect NFTs myself. I don't, because of if I like that piece of art, I can simply digitally copy it and have it up on my thing. Now, I don't own it. The nice thing about NFTs is I can create one with a certificate of authenticity and ownership on a blockchain, and I know that I own that. Nobody else can move it out of my wallet, and I can prove that I own the rights and everything to it immutably. Now, that doesn't mean, just like anything else that's out on the internet, you can make a copy of it and have a copy of it. You can't sell that legally. You can't, you don't own the original. And that's what an NFT is, an electronic version of art or music or anything else. It can only exist virtually, but like there's a site out there, Rick Dumont, and he's an artist. He's a painter, and he sells his paintings online, and he sells a token with the certificate of authenticity and a digital representation of that. So you're getting the digital NFT, but you're also getting the physical piece.
So you're getting a physically minted token? Is that what it is?
Yeah, he's getting the token itself in digital format. He's getting the digital NFT when the buyer does. He gets the digital certificate of authenticity into their wallet. And then in the mail, they get the actual physical painting that he made. So some
Okay.
people are doing NFTs. Now you could do an NFT, as you know, we talked about that's strictly done on digital. It could be. I loved the NFT project that the two guys did that really exploded on the Ethereum network. And then when they made like 100, 150 different cards, and they all had little aspects of it. And the way they generated and they spent all this time doing all these little aspects, and then had them, each card took in different pieces to become unique in of their own. You have to read the article on how they did it, but I thought, for not from a person that doesn't really appreciate NFTs, I appreciate the monetary value that they're creating in the market. The way they did that art project to me was outstanding. And those cards went for several, some of them went for high dollar values, and they are still trading back and forth on secondary markets. Now, there's a lot of people out there just spending half an hour on Photoshop and creating something, and, or adding filters to already existing art, and out there selling it. And,
Right.
It's a wide open, wild marketplace.
So like you have all these different, like Solana and Cardano. And I'll get into those a little bit more later on, maybe in the next video, because I'd like to see how they kind of compare with Ravencoin, and how that goes. But the next video we do is going to be strictly Ravencoin.
Okay.
Right after this. But some of your like Polkadot and your Doge and your SHIB, and like what are there any utilitarian uses for those types of coins, or are they just there?
Some have some and some don't. Doge is Doge is a great outlier. I don't know, anomaly. It has no value. Right. It does nothing. It was a meme coin. It's not capped. The owner who created it put it out there as a joke so people could trade and fun. And for 10 years, it was 0.002 cents, or 21 to 23 Satoshis.
Right.
And then all of a sudden, I think there's like a few different factors involved here. I think a lot of it has to do with Robinhood and all the diamond hands that came out of the GME short sales, and then all of a sudden you could get Dogecoin on Robinhood. So they had somewhere to put all this new money that they had made. Then you had Elon Musk, there's a whole backstory there, tweeting out his thing. Right. I don't know if most people know this, but there's an address out there that started collecting Dogecoin in September of 2019, and it now owns like 25 to 28% of all Doge. The total, I did an analysis on it, and I looked at it because they haven't sold any for a long time, but they did sell some and buy some. But the total input in dollars in buying and selling is like $374 million worth of Doge that they spent buying Doge. It's now worth like $9 billion. That address. Wow. And it actually made it up to 29 billion at one point. So they spent $374 million buying at Dogecoin that's now worth 8 or 9 billion. Who is that?
Right.
My opinion, I know I have an opinion. I don't know for sure, but who's got that kind of money to waste on a meme coin?
Well, maybe Elon.
maybe. So, and then who's behind SHIB? SHIB I don't know what SHIB does. It doesn't do anything. Right. As far as I know, it doesn't have any utility behind it. And a lot of coins are like that. You can just create coins that have no utility. Or you can create coins that have a purpose behind them. Tezos was created for a lot of things, but one of the main things is to list securities on a blockchain so that you can take your company, make your stocks, and they're actually traded on the blockchain rather than through, the old school exchange software.
Yeah. So get into that real quick. Like what are like in your opinion, because there's so many platforms out there as far as Coinbase and Binance and
Oh, yeah.
Robinhood, and I know Webull has some cryptos on there. Like in your opinion, what's the best platform to use for trading cryptos?
Well, in the US, I mean, you need to make your Coinbase account and you need to make your Binance US account. You need to make, if you're out of the United States, you can use Binance.com. Those are the biggest ones, the two biggest ones. Now I have like literally probably a dozen, 15 different accounts on different crypto exchanges around places.
Mm-hmm.
And I do that because I also get a bunch of what they call shit coins.
Right.
And shit coins are just, there's tens of thousands of them out there, and they're 1/1,000,000th of a penny, and they're fun
Like
to play
penny
around
stocks.
with. Yeah, exactly. Except sub penny stocks, and
Yeah.
I'll mention a place I love to play around with is Yobit, YOBIT, and it's a Russian exchange,
Mm-hmm.
and it is the wild west. But you play around. I don't put any money in there, but you get free coins there. You ship some other free coins there, and you mess around.
Right.
I Bittrex is another good place. They're big. Coin Market Cap has, if you go into there and you're looking at a coin, they show all the exchanges that the different coins trade on.
Sure.
So there's a ton of, I mean, literally hundreds of them out there, and you have to really, if for your general trader that's maybe into stocks and wants to dabble into crypto, I'd say Coinbase, Coinbase Pro, and Binance.
Okay.
Those are going to be your traditional, more standard to your stock, what you're used to with your stocks. They're safer exchanges. Can they get hacked? Yeah, they've been hacked. All of them have been hacked.
Mm-hmm.
But I know CZ over at Binance has always made good on anything that's happened within their ecosystem.
Yeah, as they should. I mean, it's you'd probably be out of business if they were just like, well, here's what it is.
Mount Gox.
Yeah.
Yeah, Mount Gox is a perfect, the biggest of all the examples.
Right.
They got hacked and they lost it all, and you can't return that stuff.
Yeah. So is there always going to be like these little shit coins? I mean, around? I mean, at what point does crypto as a whole become big enough to limit, and stifle the introduction of these shit coins? Never.
I mean, look at penny stocks, over the counter stuff.
Right.
I mean, how many gold companies out there are doing beverages and because you've done a reverse merger into a clean shell?
Yeah.
So, and if they build a big enough community to get enough, things, they become, valuable. So why not? Why wouldn't people trade them? If you're going to give me 3 cents for this coin that I just created out of thin air, I'm going to create another one.
Right. Yeah.
And there's just too much free money out there. And that's, so if in the 100 years, they've not stopped it in the stock market, what makes you think they'll stop it in this market? Exactly. And what reason to? I mean, there's no reason to. I don't want that regulation. That's just more regulation.
Sure, and that's it. And obviously, with the speculation of the government trying to get involved more with regulating crypto, I mean, how confident are you that they're going to have a lot of trouble doing that? Because I know that the U.S. wants to create their own kind of digital currency. And put it out there for the public, but what are the implications of it happening as far as them regulating it?
Well, first off, let's just say digital currencies, bank digital currencies, are not the same as crypto. They are not. They are a form of control. They are centralized. They are owned, and everything's watched. They're Big Brother. That's the bottom line. That's all it is. Cryptos are not controlled by a government, are not controlled by a central authority for the most part. I mean, you can have some that are. Many of them are. I mean, a pre-mine, that central company behind it. But in Bitcoin's case, there's nobody. There's no CEO. There's nobody that can sign a contract. There's nobody that can say stop this or don't do this or do this. It's all community driven, and it's, if enough people say do it, then it happens. But there are many of them out there. Ethereum is controlled by a central body. You know that how much control. Now, the nice thing about, I mean, a lot of those, if they make changes to Ethereum, then they have to put the changes out there, and then the miners out in there that are maintaining the network actually have to accept that. So they don't have complete control in things like that. So, you know, if you want to upgrade it, everybody's got to accept the upgrade, or at least 51%. And let's say only 60% of it accept it and 40% of it don't. You'll literally split that blockchain into two. And then you'll have old coins and you'll have the new ones with the new features on it.
Interesting.
Yeah. So, I mean, that can happen. And then and there's change like Tezos, I believe, and I may be talking. There's coins out there that can implement changes in them, and they're going to happen, regardless of what the miners say or the nodes say or the proof of stake say. The changes are going to happen. So the underlying technology can be manipulated and changed to do different things.
Okay.
You know, obviously, Bitcoin is thing. Ethereum is much different than Bitcoin, although they're both using a blockchain and a ledger. Cardano or Ripple or all those do different use cases.
So getting back to like what it like as far as the blockchains are concerned, like what is a node?
A node is a computer that has a copy of the ledger on it and is verifying that ledger with other nodes. So, like in the case of Ravencoin, I can run my wallet on my computer, and all it does is keep my coins, or I can run it as a node, and in which case it's verifying the ledger with the other computers. Okay. So when all your mining stuff is quote a node. So if I've got an ASCII or a computer that's mining, meaning it's actively trying to find a good block to add to the of transactions, that's a node. It's got a full copy of the ledger on there. It's verifying that ledger with other computers. You can have your wallet and all your coins in your phone or on your computer, and it's not doing the full verification. So it's not a node, so to speak.
So, and you mentioned earlier staking, and some coins out there that do stake, like Algorand and what was it that you mentioned? XTC.
XTC, Tezos. Ethereum's moving to staking. Yeah,
and what is staking?
Okay. Yeah, mining is when you're trying to do a mathematical computation to get this block of transactions into the ledger. Staking is you say I have 100 Ethereum and I put them in a wallet, and that's proof that I have those in a node. Actually, I proof that I own those, and you have to prove that you own those, and then that does what they call. Excuse me, one second. That does what they call the mining. You're actually staking coins instead of mining coins. So you prove that you have a certain number of coins, you're a node, you're verifying the ledger through your amount of, not only through the coins that you hold, but through your copy of the blockchain, and you get rewarded by same way miners do. But you're actually not doing the same thing.
Yeah, you're not doing. Yeah, you got proof of staking, proof of work. So your proof of work is you actually physically mining the crypto.
Well, that's proof of work is you're doing the mathematical work, proving that you've done the mathematical work. Proof of stake is proving that you own those coins in that particular node, and then you can do the checking and the checking of the blocks and everything. You want to get into a much more technical aspect on that? Well, I'll defer you to somebody else.
Right.
but so, for most of us, it's not an important distinction.
Right.
For your technical guys, your miners, for people that are, I want to know about it because I'm a little more into crypto, and it guides the cryptos that I'm interested in.
Yeah, but if I go in and buy like, XTZ or Algorand, and I'm just sitting there and they have like a 4% or a 5% stake, that means it's basically I'm, in a sense, collecting interest.
Yeah, it's exactly what you're doing. You're collecting interest by using my stake proves that I have those coins, and they can verify the blockchain and ledgers against my stake. So
I gotcha.
therefore, they're paying me a percentage.
Right.
Now, there's lots of, that's just one way to get interest in crypto. I know we've heard about DiFi or diversified finance and
Yeah.
Wi-Fi.
Explain that. Because that's something fairly newer, isn't it? That's that more
Yeah.
people are accepting the DiFi, and so I kind of wanted to
Okay.
see like what your thoughts were on that.
Hold on. Let me see.
Properly explain DeFi. There's a lot of misconceptions about exactly how DeFi works, and what the relationship is between Ethereum and the tokens and the validators and the supply and yield farming and that kind of thing. So basically, here's how it works. So you have DeFi, and then you have the yield farming, and then you've got like a bunch of terms and some unregistered securities and some stuff, and then some people throw in money they're going to lose, and then you have some cake and a fire, and there's DeFi. So I wanted to do a quick video just to
Well, we thought that there. Yeah, it is. There's so much going on out there. It's so different. I honestly don't understand a lot of the way different things they're doing with DeFi. I will tell you one thing that I do with it. There on an exchange, one of these lesser out there exchanges, there's called you can do liquidity pools, where I put in an equal amount of, let's say I'm trading, I'm going to use Ravencoin against USDT, the US dollar token. I put in $100 of Ravencoin and $100 of USDT against each other. That creates liquidity, just like your market makers do in the stock market.
Okay.
So I buy the exchange uses my coin stuff to buy and sell to make the market, and then I get a small transaction. I get part of the transaction fees.
Okay. That makes
So that's I'm providing market liquidity. That's kind of these sushi swap things where they were doing, you mint this one coin and then you put it into a farm and you yield another coin from that farm, and then you can sell it on this other exchange for these tokens. It's crazy. If you're going to mess in a DeFi market, you literally going to have to spend hours a day staying on top of it. I got a friend of mine that does do all that stuff, and he tells me about all this crazy. He's got sushi and cake and SHIB and he's the one that got me into the liquidity pool and all these other things, and he's really on. But it's the wild, wild west, and just like Bruce said in there, people throw in a bunch of money they're going to lose. Yeah, because there's so many rug pulls too. People do this, blows up and throw all that money in and they're gone.
Yeah.
Or the guys who got in early sell out real quick and it goes down, 200%. And you're left holding the bag. But it's unregulated. It's happening all over the world. So it's not just US laws or Russian laws or Chinese laws. It's, it could be happening in, Timbuktu, and we don't know who's doing it.
Right.
And what is, so explaining DeFi, no, I can't do it.
Okay. And that's something we'll get into in probably another video too. Because as we go through, I want to go deeper into some of the technicals of crypto and things like that. Because I know, just with the stock market, for example, and just I'm just going to touch on this real quick, is so like it's extremely volatile, and any of your volatile stocks, your technical analysis is shit. It doesn't work.
I agree.
You can't use it. You can't, because it's so volatile. You can't start trying to figure out the patterns through the graphs because it's just volatile. It's at 1 second, it could be, 20,000, and, in 3 months, it could be 60,000. So it's
how are you going to TA Elon tweet?
Right. Exactly. You can't, and that's, but I wanted to talk about, okay, so obviously what's important when you're buying cryptos is our wallets and your different types of wallets. You've got, you've got your hot wallets, your cold wallets. You got, so what are these different wallets?
Okay, yeah. Now, definitely a wallet in followers crypto is very, very important. This is your single most biggest security area flaw that you can get hacked in. Now, when you sign on to an exchange, they create a wallet for you. You have an address, and that's a long string of unique numbers. Now, only you have that address. 1441 Main Street, Miami, Florida, whatever zip code, only one of those addresses exists in the world. So I can send a piece of mail, put that address, and I know it's only going to that place. That's the same exact way crypto works. You're given this unintelligible long string of numbers that only one of those exists, and you own it. Now, you can give it and transfer it to other people or whatever.
Sure.
It's not physically stuck to there.
So is that
Now,
on the exchanges? Is that a custodial or non-custodial? Or?
yeah, that's now on the exchanges. That's custodial. That means somebody else is holding your coins, holding your wallet, maybe holding your private keys. Your private keys are your behind your password. So obviously, I'm not going to remember a 48 long string of numbers and stuff as my address, but I can have private keys. So if I lose my wallet, my computer gets destroyed, I have these two numbers, public and private keys. I can go to another computer, fire up a blank wallet, put in my public and private key, and it will read my information off the blockchain and give me my wallet back and all my coins. So that's like your username and password, but it's your safety deposit key that you keep, that nobody else knows about, nobody else sees. You have 15 copies. You put one of them in your fire lockbox, and you don't trust that your hard drive dies, because if you have a fire in your house and you lose your computer and you don't have your private keys and you had your Bitcoin or whatever only in your non-custodial wallet. Now, I have a wallet on my computer and I have some coins in that wallet, and those coins exist nowhere else.
So what type of wallet is that? Is that a hot wallet or a cold wallet? Or?
That's a hot wallet. A hot wallet means it's connected to the internet or it's connected to a computer or something. A cold wallet is when you transfer them into a USB cartridge. You put a wallet on your USB and you physically unplug it from the internet. Cannot be accessed from the internet. It's cold. You plug it back in and make it hot.
And those cold wallets typically cost money, correct?
Oh, yeah. It's usually a physical thing. Now, a cold wallet could be, I'll tell you one, that you take a piece of stainless steel, you etch your address on there, you etch your private and public key on there, and you destroy your wallet on your computer. That then becomes a cold wallet.
Interesting.
It's not connected to anything. There's no physical, all your stuff off, there's no digital representation of that wallet anymore because you've wiped it off your computer. And then you can go crank up any wallet on any computer, put in those keys, and restore your wallet.
Interesting. So with
good.
So with your non-custodial, what's the difference between custodial and non-custodial?
Yeah. Custodial means somebody else is holding. Like your bank account is a custodial bank account because your money is not physically in your house or your computer. It's physically at that bank or digitally at that bank. A custodial wallet's the same. Your coins reside at Coinbase or at Binance's servers, and they have the physical wallet or the digital representation of the wallet. Now, I can, let's say, get a Bitcoin wallet. I can go online, go to Bitcoin's, foundation site and download a piece of software that is a wallet, a non-custodial wallet, and it exists only on my computer. And I move my coins into that address on that wallet. Those coins don't exist at Coinbase. They don't exist in Binance or anywhere else. They only exist in your wallet. You own them. Like physically having your money in your hand. If that money burns up, it's not replaced by the bank. You lose that wallet, it's not replaced. Somebody gets your username, your passwords, your keys, private keys, they can restore that wallet and move your money out of there.
Okay.
But now let's say at my bank, and my money at my bank right now, my bank could say, hey, you didn't get this check in here. We're taking $600 out of your bank account because you didn't make that money. And there's nothing you can do about it.
Right.
Nobody can do that in my wallet.
Yeah, it's yours.
Unless,
Nobody can touch it.
unless it's compromised. Right.
Right.
So added levels of security, but also added levels of responsibility.
100%. And so while they're in the wallet, whether it be hot wallet or cold wallet, obviously custodial, non-custodial, we know are going to move with the price fluctuation of the cryptos. Do they do the same in the hot and cold wallets?
Oh, that has nothing to do with the price. Your coins, like I'm looking at one of my wallets here. I got 1,470 Raven coin in this wallet. It doesn't matter what the price is. I have 1,470 Raven coin.
Right.
Now,
but it'll be,
so the price
increase
goes 10
and decrease with the price.
Not the number. No, the number of coins you have in your wallet.
No. I meant like the price.
The value. Well, yeah, if
what I meant.
The value, obviously, against the US dollar. So let's say if Raven coin goes up to $1 a coin, I could then sell these for $1,470.
Right.
Or now but at the same time, now Bitcoin has gone up a bunch. I can trade this against Bitcoin. Right now, it's 174 Satoshis per Raven coin. Just for Bitcoin is divisible by up to 8 decimal points.
Mm-hmm.
If you go down to the very last one, you got 0.000000001. That's the smallest increment of Bitcoin. That's called a Satoshi. It's been named after the creator. So the smallest increment of Bitcoin is 1 Satoshi. Right now, Raven coin is 175 Satoshis. If I were to sell one, 2 weeks ago, it was 250 Satoshis. But the price of Raven coin was still 10, 11 cents. But the price of Bitcoin went up. So your Raven coin, it's against the price of it, or cost of it, or value is what you're trading it against. If you're trading it against US dollars, it's basically the same as it was 2 weeks ago. If you're trading it against Bitcoin, value's gone down. If you're trading it against something else that's gone down in value, then the value of your Raven coin's gone up.
So you can trade your different cryptos against Bitcoin. Is that correct? Okay.
Oh yeah, different Bitcoin against fiat dollars, pounds, rubles, against other Dogecoin. Doge. One of the reasons Doge got kind of popular back in the day, and still is because there were coins that were so bad they were less than 1 Satoshi of a value of Bitcoin. So there's if there's no way to trade that. So they traded against Doge because Doge was 23 Satoshi. So now I can do 1 Satoshi of Doge, or 1,000. And so it became sort of the default crypt trading pair for really tiny price cryptos.
I gotcha.
That's some of the value in Doge and why people had it.
So like one of the final questions that I have is like, what do you see as the future of crypto?
What I'd like to see and where it's going to be is obviously yet to be determined. We're obviously, if anybody doesn't know that we're in a massive change going on globally in every aspect of our lives, and it's absolutely going to affect crypto. There's a war on crypto right now because it's freedom for the individual, and a lot of countries and governments don't like that. They don't want to lose that control. Mm-hmm. China just outlawed crypto. Ultimately, what I'd like to see is crypto to break out and be uncontrolled, and then create a truly, properly regulated capitalistic market. I honestly believe a properly regulated capitalistic market is the best economic system, not only for economics, but for both physical and spiritual growth of people. Meaning, but we don't have that in this country. I think our economic system is the farthest thing from properly regulated. But I think Bitcoin or blockchain has the ability, so that Medici Ventures is company that went out and kind of put together a carousel of a bunch of different blockchain companies, or companies that are doing things with blockchain, in order to make a soup to nuts solution. One of the things they do, and I read a little piece on this, it's funny, a couple of days before they came out, is like government in a box. You could do your voting, your financial system, your land grants, your land titling, economic systems, taxes, could all be done with a blockchain and no human intervention. So you don't need any government people behind it. And it would be unbiased, and it'd be, everybody'd pay the same thing. Everybody'd have the same rules. Nobody could break the rules. You couldn't pay somebody off to fudge it. Nobody to graft. So you could literally take out, what's that, 50, 60% of the government functions no longer need people behind them. And then obviously no corruption.
Right.
That's what they're scared of. Governments without governors, rules without rulers.
Yeah. They don't have any control over manipulating the finances in the system.
Exactly. And what the ultimate, and when we get to Raven coin, we'll dig into this. My ultimate, what I'd love to see is a global system of blockchain ledgers that give direct access for creators and producers to consumers with no third-party intervention. No Amazon. We don't need Amazon. We don't need YouTube. We don't need Twitter. We don't need Kindle. We don't need Spotify or iHeartRadio or Netflix or Hulu or any of that. We do not need a middleman on any of that with blockchain. And and ultimately that's the freedom that I see that it could give everybody.
Well, and that's something we will take a deeper dive into in the next video with Raven, which we'll be doing here shortly, because I kind of wanted to do them back to back. Yeah, I mean, Ed, thank you so much. I hope everybody has learned something from this video, because there's a lot of great information here.
Well, I hope I didn't ramble too much and confuse anybody.
I think it was pretty well done in layman's terms, because that's what I wanted to try to get to and make sure, because it's so complex, and we could go on for hours and hours and hours and hours of crypto.
Oh yeah,
we'll do more deeper dive videos of crypto, but I just wanted to kind of give people who haven't been involved with crypto yet, don't really know how to get involved with crypto, to kind of give them an opportunity to give them a jump start on where to start looking and researching as far as what they wanted to do. But thank you, Ed, and we'll see you guys soon. Thank you.
Sounds great. Thanks, Scott. Bye.
Okay.